Hi, it's Eric with the HI EMIM Africa Fund, giving the update for October. The fund was down about 90 basis points, mix of negative performance from both the longs and the shorts. The fund share price was quite volatile during the month, but there wasn't really any change in positioning, just a big up-down move in our holdings in the gold mining stocks and a bit of volatility in the South African shorts. Overall, we're very happy with how we're positioned. I think it's going to do well for what we see happening in the months ahead. The equity book's about 36% net long with a gross of 65, and the fixed income portfolio is about 28% with a mix of U.S. Treasuries and Egyptian T-bills that are yielding 10%. Towards the end of the month, we did add to Naspers, where the discount to their shareholdings in Tencent and other investment internet properties reached a historically high discount. So we did add to it, took it up over 3%, over a 3% position. During the month, we had an update from Sibanye-Stillwater, and it's really a reminder why we're overweight the African precious metal companies. Sibanye is the world's second largest producer of platinum, palladium, and rhodium. They've got mines in South Africa, Zimbabwe, and Montana. And their third quarter EBITDA was up 180% year over year. And the net debt to EBITDA was down to 0.05%, so almost no debt. So despite being a strategic provider of emissions-reducing metals like palladium and rhodium, and new hydrogen economy metals like platinum, this company's shares are trading at just 4 times earnings. Another similar situation is Impala. Impala Platinum producer, it has mines in South Africa, Zimbabwe, and Canada. And same thing, it's also trading at under 5 times earnings. And like Sibanye, Impala has used the high metal prices and all the cash flows to deleverage, and now they're at a net cash position even after their acquisition in Canada. I think these acquisitions of Stillwater in Montana and Impala's acquisition in Ontario are important as they're chipping away at the investor logic for why these companies should trade at such big discounts. These are now diversified mining companies with clean balance sheets, high cash flows, new economy metals, and they're trading at 5 times earnings. The downside would be if platinum, palladium, rhodium prices all declined. There is a bit of an inbuilt hedge because there still are a lot of South African rand operating costs. So a weak rand, if you were to see a big sell-off in the metals, I would expect the rand would be weak. And so there'd be an offset in operating costs as well. At the portfolio level, if you did see a big drop in all these metals, maybe because of a deeper than expected recession, possibly it would be good for the gold price, where we're also long Endeavour Mining, B2 Gold, Senior Resources, and Harmony. So maybe we'd make it back in gold prices. Overall, we see tremendous value and upside in African precious metal companies, and we think even if the human investors don't figure it out, maybe these smart AI algorithms will see the growing earnings, the high cash flows, clean balance sheets, and extraordinarily low valuations, and maybe they'll start to chase the trend. Overall, we think this is a much less crowded space than US tech stocks or renewables. And if, as we expect, there's still a lot of uncertainty in the months ahead and possibly more disruption from the coronavirus, maybe the global investors will see that precious metal companies are a good place to be. Thank you.